No, so we run full SI, 100% SI portfolio since beginning of 2018.
Okay.
Usually multi-asset class, where we have, of course, on the equity side, of course, we have sort of 4 categories. We use an engagement sleeve. We use a thematic approach. We use a ESG leader approach and an ESG improver approach. And on the fixed income side, we use MDBs as sort of the high grade component. And then we go through that. Now, the interesting part is, and that's probably a good example on how the landscape is changing. When we started in 2018, we had 2 components missing on the fixed income side. We didn't have any high yield exposure into ESG because we couldn't find the right implementation strategy, despite it would have made sense from an asset allocation perspective. But after 1.5 years, you start to see providers delivering and high yield approach into ESG, and we have then integrated that. And just recently, we were missing so far emerging market debt, for example, as an investment strategy. And we just this week basically started to implement an EM debt ESG solution where we try to invest into MDBs, but we taking EM currency risk to even frontier currencies like the Uganda shilling, for example, where we bridge basically the funding gap and income gap of certain projects in these countries, because they usually finance them out of hard currencies. So if World Bank bonds issuing a bonds to finance some of these projects, there's a currency mismatch. So we try to step in, work even on a peer-to-peer level with this project and take on the currency risk for our investors. We are able to diversify that away. And so we actually have now an EM debt component into our portfolio.